Good morning everybody, it's Christian from Serene Education with the 4 major notes update for the 31st of May 2012. Hi guys, just going to be going over the 4 majors this morning, starting with the Euro against US dollar. In front of me I have the daily chart, and you can see yesterday's candle, very much a negative one. This pretty much coming after the break of the 126500 mark that we saw recently. Nice punch through, a lot of hesitation going through it, a lot of negative hesitation going through it. Ceiling level found, and we saw Monday and Tuesday's sell-off, and now going into Thursday we've seen a slight pullback on the Asian session, but as it stands at the moment now, all the sentiment is looking very negative for this pair as we head lower, and the potential target for this one over here after the sell-off at the top here that we saw in early May, we looked at the potential bounce here just at the 126500 mark, and then moved towards the 2300, and that took us lower. But you can see the fib extension levels here at 50 and 61.8 just recently being broken, and as long as we can stay below the 61.8, then ultimately we should be looking for the target to be at 100%, which would take us way down here to the excuse me 12,200 mark, which really comes into play when you look at it on the weekly chart of a prior support and resistance back here in 2010, May-June of 2010 guys, and not looking good at the moment for the euro, so be aware of that. I'll go back to the daily again. As long as price can maintain those levels below the 61.8 here at the 12.42.7, then we should see further continuation down towards at least the, we have a 78.6 mark we can actually project on here. If I can just do that quickly just to show you guys. Here we go, 78.6 here, roughly around the 12.30.200 mark. So still some scope for movement, and as long as price is still making those lower swings, and the CTC is very much dictated in our favor, red arrow, red candle, and the CTC bars on either side of the red, moving average is all about price. Price will continue to fall to the downside. Sterling, very negative day yesterday. A massive down candle. I mean, these increments on the side of here are 50 pips, so you're looking at 20 on that side, plus the 50, 70, plus another 50. That's another 100. Oof, you're looking at 200 odd pips here in the day yesterday. Asian session trading this morning, very consolidative. Doji at the moment now, very small trading range after this breakout, and this massive move yesterday to the downside on negative figures, and still pushing lower. All the moving averages are above price, and you can see how much negativity or this momentum drive here, little hesitation in this movement. Genuine market sentiment moves are favoring the negative side, and they've fallen quite drastically since the break of the 1600, the so-called support and resistance level, quite recently. And you can just put that in nice and strong so you can see it. Notice a sell-off once we broke that level. We tested the 15700, which was also a small support and resistance level. If I can just do my trend pullback, so you can see the 23.6, and this area over here, classical 1565, a lot of support and resistance through here, was the last protocol for this pair, and that was the 61.8. Now the 78.6 layer area is definitely in target, if not quite close to reaching. Yes, there we go, straight into that, and we've had that hesitation. Break below the 78.6, ultimately we should be heading down towards the zero that we saw first way back here in January of this year at 1525. So consolidation as we head into the 78.6 fib extension. Look for a close lower than this area here at 1547 or 46 in particular, or even 1545 would be great. The further away it gets from this area, the more likely it's going to continue to fall. Otherwise we could see consolidation here taking place. There's a lot of news out today guys, be aware of it. We could see some consolidation here. We could see a potential pullback at this area at 78.6 before we see a break potentially by the end of the week to go even lower. But before any of that happens, we have to see a genuine closed lower. Otherwise it's consolidation on this area here of support. This pair here, the Swiss franc, good old Swissy, we said that we wanted to see a break above 960, prior support and resistance level, massive resistance at the top here, and we headed very nicely into this and over the past recent days we've seen price consolidating under the 9600 mark. We wanted a nice bullish candle and we got it. Whoa, yesterday euro both going bearish, sterling lower, and US dollar Swiss franc pumping higher, pushing higher, breaking above this prior resistance level here at 9600. Now it's found this upside momentum. Ideally we'd like to see a continuation to the upside. We could see a slight pull consolidation as we've broken this major resistance level. We could see consolidation all the way back down towards 960, or if it hugs up, or if it maintains the high here and stays within the 23.6 area of this pullback, then we could see potential for further extensions higher quite soon. So the low of this upside move to the high, you can see that 23.6 here at the 96.70 mark, 38.50, and the 61 will take us back to this prior resistance breakout. So if we can maintain these highs of the upper end of this candle, then we could see continuations really happening quite soon. The lower it gets back, the more likely it's going to target the breakout that we saw at 960 quite soon. So overall, everything looking fantastic for this US dollar Swiss franc pair. All the moving average below price. Our CTC is very much still in positive trend mode, and most importantly, we've just broken a major support and resistance level here at 960. So we're going to see now momentum hopefully pushing on from this over the next couple of weeks, and our next target potentially would be these areas here, these prior consolidation areas here, hesitation areas around the 97.50 mark, 97.50 marks, which isn't too far off from here. That'll be our first target. We could see consolidation at this area before we see any journey for it. So we could see it at least attempting to consolidate around here before we see the trend line, upside trend, coming into play. But yeah, 960 is definitely an area of consolidation, price support and resistance level. So just be aware of that, guys. Last pair of the day is US dollar Japanese yen, and here we've seen further extensions to the downside, moving away from this 80. I mentioned since the start of this week that the 80 was a very strong support and resistance level in the past. Notice here you can see 50%. We had a clear breakout of that way back in early Feb, and since then price has rallied towards 8400, which happened to be a very strong price support and resistance level on another time frame going back a number of months. And since hitting that, we've seen price pulling back quite drastically, hanging around the 80 for quite some time. A lot of hesitation going, and we wanted to see the market give us a definite bearish signal that price was still looking favorable downside, because our CTC by this stage had told us we should be looking for nothing more than negative sentiment on the market. And sure enough, we had this bearish engulfing candle here at the 80 mark, engulfing all of this indecision going sideways, and that pushed price back towards a 61.8% fib extension, and then we had a psychological bounce back to the underside of 80. Yet again another failure, a bit of consolidation, and then yesterday's candle really pumping to the downside, pushing it lower back towards 61.8 and closing. However, on the Asian session, price really maintaining that momentum to the downside, now pushing below the 61.8. So now price can stay below the 61.8, and ultimately we could see potential for price to head towards the 78.6 fib extension here, roughly just below the 78 or 75, or sorry, the 77.70 mark, which takes us to price support and resistance in the past here. Clearly you can see it, hesitation, and most importantly also back below the institution moving average. Price, as you can see, is heading towards that psychological barrier here at 78.50. So ideally we want to see price trading below that to see any further scope for downside movement. Otherwise what could happen is we could see a nice bounce on here, price actually finding support above the 61.8 and then reattempting the 80 quite soon. So very, very important, we've got to see a break below the 78.50 in order to see this momentum genuinely still favoring downside. And as I said, if you're trading below an institution moving average, then overall sentiment is really, really negative for this pair. So you can see that price has been squeezing now as it's been going into this downside trend. You notice these two bands now starting to squeeze as we head lower. These supports all starting to squeeze, and the highs are getting also. So we're going into this before it was quite a big, and then this mouth is starting to get very, very small as we head lower. So as long as it maintains below 61.8, then ultimately we still be looking for negative sentiment intraday to filter through. and just be aware of the 78.50 here because of this the institution moving average. That could definitely tell us that we could see a bit of consolidation under the 61.8. As long as it maintains below under 61.8, we should be looking for further downside sentiment to unfold. That's it for today, guys. Hope you have a fantastic trading day. Keep it simple. If you are using this template, please follow the rules of the template. Back it up with sound money management. But as per normal, keep it as simple as possible. Draw your support and resistance lines, your major support and resistance lines, your trend lines, and look at what price is doing in and around those areas. And then just to back it up, try and use the CTC or the count the cash system to actually give you a better confirmation signal. Other than that, have a fantastic trading day. There's a lot of news out today, so be aware of it. And I'll see you first thing tomorrow morning. Until then, trade serenely.